Excellent, and thank you for hosting me once again. It's been a while since I last spoke, and there's a lot to talk about. Manuka Resources is an operating gold and silver project, or operating gold and silver producer in Australia. We're located in the Cobar Basin of New South Wales, and we have two fantastic projects in the region, as well as a project in New Zealand, which I'll talk on a little bit further. In the background here, you can actually see our plant. It's a 1,000,000 ton per annum plant, which is operating, and then in the back of that is the tailings. Moving forward, we are currently trading at 4.5 cents, which for a company already producing gold, and with two fully permitted projects, I think it's exceptionally cheap. Market capitalization is $25 million. I do believe this is a low point for us going forward. We have a very experienced board. Alan Eggers, who is an executive director, he is a geologist for the past 40 years, and he previously started a company called Summit Resources, which he built to be a $1.2 billion company, and sold that to Paladin Energy. Anthony McPaul, or Tony McPaul, who's a non-exec director of ours, 35 years of experience in the mining industry. Most recently, he was the general manager of Newcrest's Cadia Valley operations in New South Wales, very close to where we are. That's one of the largest gold mines, or perhaps the largest gold mine in Australia. So he has significant experience. John Setton, Tony Gilholm, and Hayden Lynch fill our senior management team. Our core projects, as mentioned, we've got a producing gold and silver project in the Cobar Basin. Our gold project is an open pit project. Its previous history, it's already produced over 500,000 ounces of gold at 15 grams a ton, or almost half an ounce a ton. Very high grade gold producer. We restarted this project. We restarted the project in 2020, and we produced for 2 years. And then we went on to silver production. We're now back with a screening project, which we started again in May 2023. There's a 42-person mining camp. There's power, water, admin offices. And we've recently upgraded our mineral resource to 160,000 ounces. Our expectations are for 20,000 ounces of gold production over the next 4 years. What's most important for us, though, is that gives us fully funded exploration. We really see the future of our company producing profits from the screening project, producing profits from our silver project, but leading us to be fully funded in exploration. The silver project, the Warner Winter Silver Project, sorry, I've just lost this, is 100% owned. This was previously the largest silver producer in Australia. It's got an 850,000 to 1,000,000 ton per annum plant. It's again fully permitted, mine camp, tailings, all necessary infrastructure. Again, excellent exploration potential around the area. At the same time, we have our we purchased this project in November of last year, the Taranaki VTM, vanadium, titanium, and magnetite. Magnetite is an iron ore, and it's a substantial project in New Zealand. This will be the lowest carbon emitter of all iron ore producers globally. It's a sea-based dredging project. So I want to stress this very clearly from the beginning. This is not a deep sea mining project. It's a dredging project, same as they do at ports around the world. We'll be operating in between 20 to 40 meters depth of water. And because there's no drill and blast, there's no hard rock removal. It's purely a vacuum cleaner, a sea-based vacuum cleaner, which sucks up the black sea sand. Our carbon emissions are 62 kilograms per ton of ore, whereas our hard rock competitors are between 125 to 250 kilograms per ton of ore. It'll be one of the lowest cost. It'll be in the lowest cost quartile for iron ore producers globally. It'll be between 20 and 23 US dollars per ton, and it's located in New Zealand's exclusive economic zone. To date, we've invested over $85 million New Zealand, so 50 million US. There's a mining license already granted, gives approval for 5 million ton per annum. The EPA, the initial EPA environmental consents were granted in 2017, and we're awaiting final approvals now. That's nearing completion. And then recently we have announced a maiden vanadium JORC resource. There's over 1.6 million tons of V2O5 vanadium pentoxide contained. That was released on the 1st of March. So the key thing about us is we are looking to add value to our shareholders in 4 directions. The first direction, as I've touched on earlier, is we are cash flow positive. We have a screening project, a gold screening project, which will continue from May of this year, from May of 2023, and it'll go till Q4 of 2027. We're targeting the recovery and sale of 75 to 90,000 ounces of gold over the next 4 to 5 years, 4 to 4.5 years. And this will give us an EBITDA for the project of between 60 to 75 million Aussie dollars. Fully funds all our exploration. It obviously generates profit for the company as well for any expansion we wish to pursue. At the same time, we are also looking, well, we've touched on the exploration with the fully funded exploration, and there's 2 key projects that we're really pursuing aggressively. The first is our Pipeline Ridge project, and the second is the Mount Boppy Deeps program. There's also advanced gold programs we're looking, which will be further on down the track, so they will occur in 2024 onwards. These projects will kick off from October, so we're starting on Pipeline Ridge in this month, from next week onwards, and then we progress to Mount Boppy in January 2024. These projects will really start in Q4 2024, and then we have our VTM project, the New Zealand VTM project. So these are the 4 directions we're looking to add value for our company over the next 3 to 4 years. We brought out a strategic exploration review, which we released through the ASX in February of this year. Which talks about our exploration budget for the next 2 years, where we have 24,000 meters of RC drilling, reverse circulation drilling, and diamond drilling planned for the company. We are looking to add between 250,000 to 500,000 ounces of gold to Manuka's existing gold resource. Large part of that will come from Pipeline Ridge, as well as Mount Boppy, as well as our Mount Boppy beneath the existing pit resource. So moving on to these 2 projects. The way we operate, we've employed a new chief geologist about 18 months ago, Phil Bentley, and his whole modus operandi, his whole method of operating is driven by this resource triangle that he's very focused on. So at the top, he looks for creating cash flow, what's going to create cash flow and generate ongoing cash flow. And that is the Mount Boppy gold screening project for the next 4 years. And then as he moves further down the triangle, he looks to, what can he bring into his mining license as soon as possible. His focus primarily is on the Pipeline Ridge. He can bring an open pit project to market within the next 2 years. Mount Boppy already has a mining license, so the Mount Boppy Deeps program is just looking to add to what already exists at Mount Boppy, and we already have a very aggressive resource at Mount Boppy, and he's looking to add to it further on. And then the next phases are to bring inferred resources into indicated resources, and then just develop our further program. But most important is this top area, which we have well covered, the top 3 squares with our current cash flows, our Pipeline Ridge project, and then the Mount Boppy Deeps. So the screening project, the current Mount Boppy Deeps project, which is producing gold first, we've actually just completed our 4th month of sales to the refineries in Australia, gold refineries. First things first, we started reprocessing the run of mine stockpiles over here. Then we'll progress over the next 6 months to the oversized ore, which were too large for the previous contractors. We only bought this project in 2016, but it goes back over 120 years. This project started in 1895 and continued to 1925, and then went back into mining at the turn of the century, from 1995 onwards. And then we purchased this project in 2016, and we restarted processing after that. So this is a 4 million ton waste dump, which still has great, good grades of gold, over around 1.5 gram per ton, which we're screening and upgrading as we go. The oversized ore has over 3 grams per ton in large boulder-sized rocks. So we're reprocessing, rescreening, reprocessing, and tracking this across to the plant that you saw in our very first slide. The project internally, as mentioned, expected to produce 75,000 ounces of gold over 4 years. We are currently in production, and we're nearing our steady state production as we speak. We expect more than $15 million Aussie dollars per year EBITDA from this project. And our recoveries have been around the 77.5% as expected. And as mentioned, sales of gold to the refinery is now in its 4th month. Tenements, Pipeline Ridge, as we're looking to add. So this is our Mount Boppy gold mine, the pit you just saw. Pipeline Ridge follows the same fault line, and there is very strong indications for an open cut gold and gold, a little bit of silver, but more copper, lead, zinc, within the structure. So our first activity is reverse circulation diamond drilling, and then we'll move to Mount Boppy, where we'll be drilling beneath the pit. These are the numbers which really excite us about the Pipeline Ridge opportunity. These are all historical drilled intersections. They're not ours. We'll start on ours now. But as can be seen, there's some fantastically high grade. So in the gold areas, we've had intersections of 12 meters, 12 grams, 22 grams. An average for the drill program that we were looking at gave us 9 grams of gold, 95 grams average of silver. There's copper in there as well in various locations, as high as 2.3 grams, although there was just a 3-meter interval at the 2.3 grams. Again, we're looking at adding this to our inventory over the next 3 to 6 months. Mount Boppy, this is the structure of the existing pit. At this point, there's a bit of water in the pit. We stopped production in November 2021. We stopped mining in 2021. So there is a natural spring which fills the pit. We've started emptying that now. As mentioned previously, it's produced 500,000 ounces of gold. We produced 41,000 ounces of gold in a very brief period of time, and keen to now explore beneath the pit. The blue area here was that was our mine plan that we mined out. The red is the high grade zones. As can see, the mineralized zone continues for the yellow, and these shafts and tunnels are from the old timers who mined Mount Boppy between 1895 and 1925. So this is to a depth of about 150 meters. We need to go down to about 500 meters. Phil Bentley, our new geologist, he's been with us for the past 18 months. He is adamant that there is another Mount Boppy. There's another 2 or 3 Mount Boppys, which we will discover to the south of this project deeper down. Silver production. Previously, this is our silver plant. These were stockpiles which are right next to our plant. Previously, the Wonder Winter Silver Project has produced 3 million ounces of silver in the 2 years between 2012 and 13. This made the project the largest primary producer of silver in Australia. There's an existing 51 million ounce silver resource. There's a plant which we increased production up to 1 million ton per annum when we processed the stockpiles during the second half of 2022. We put through sufficient ore to produce about 400,000 ounces of silver, and for us this provides fantastic optionality. The mine is fully permitted, the plant is operational, it's been fully refurbed, and at the right pricing matrix, when we finished with gold production, we can go back to silver at any point. Very briefly, our gold and silver resource base. The gold resource was upgraded on the 25th of August. We now have 160,000 ounce resource, of which 18,000, that is in the base of the current Mount Boppy pit. So the next couple of drill levels, the next couple of mining levels will access that, and there's a further 20,000 ounces. Of this, there's a further 20,000 ounces at 4.75 grams for Mount Boppy. Silver, as mentioned, we have a 51 million ounce resource. Moving on to the Taranaki VTM project. This is the area of our mining license. So as mentioned, this is the 12 nautical mile territorial water for New Zealand. This is outside their territorial waters. They have granted us a full mining license. It's in the exclusive economic zone, the EEZ. And currently there's an operating gas platform there. This is the gas line from the Kupa oil and gas platform, which goes to shore. There's a couple of further applications in line for petroleum projects. There's a couple of wind farms under consideration. This exclusive economic zone has been established as a industrial park. As mentioned, when our project gets our final EPA approval and we move into production, we'll be looking to produce, we'll be looking to produce up to 5 million tons per annum, which is what we're fully approved for a 20-year life of mine. The concentrate grade is 0.5% vanadium or vanadium pentoxide, 56 to 57% iron ore, and there's 8.5% titanium. Both vanadium and titanium are critical minerals. They're deemed to be critical minerals throughout the EU, the USA, Australia, and Canada. So there's strong interest in those minerals. We've got a 3.2 billion ton resource. And just to put in perspective, we'll be producing 55 million pounds a year of vanadium when this project gets into production. There's recoveries taken down to 84%, our metallurgical test work. So 45 million tons will be recovered from our initial production. Achievements to date. The company incorporated itself in 2007. They brought out a PFS, the pre-feasibility study, in 2013. They received their mining license in 2014. They were given the initial EPA environmental consents to operate in 2017. They had people opposing the project, so they had to go through the Supreme Court. They received their decision in support of the project in 2021, and we purchased the project in November 22. Previous owners and ourselves to date have spent over $85 million New Zealand dollars on the project. Why it has such strong environmental advantages is there's no hard rock mining whatsoever. So there's no heavy machinery mining fleet. There are no open pits, waste dumps, haul roads, grinding circuits. nature has done our work for us. So this what normally is a hard rock project has been bashed by wave action for the last however many millions of years. And so we will suck up through a vessel, we suck up a concentrate that's already ground. It goes over a magnetic separator, and we put the improved sea sand back where it came from, and all the magnetic separator attracts the vanadium, the titanium, and magnetite, which are all magnetic. Looking at our cost structures, and even though this says February 2023, iron ore, 62% iron ore is very much in line with that today. Our pricing will be $104, it'll be at about a 15% discount to the 62% benchmark. We'll be producing a 56 to 57% iron ore. Vanadium contained has a value of up to $110 US per ton. That comes for free. The cost of producing a ton of concentrate will be in the range of $20 to $23 per ton. And titanium, we don't even build titanium into it is a critical mineral. We don't build it into any of our economic models at this point in time. We're just looking for a payable in iron ore, and we expect to be able to get a substantial payable in vanadium. Why is vanadium such a critical mineral? Historically, it was used to strengthen steel, but more recently, it is a battery. It's one of the battery metals. So whereas lithium is the battery metal of choice for mobility batteries, vanadium has fast become the metal of choice for utility and grid storage. Demand is expected to double over the next 5 years. Current production is around about 115,000 tons per annum. And interestingly, global vanadium producers, China 55%, Russia 20%, Brazil 15%, and South Africa 10%. So interest in New Zealand production, would be has already been very, it's quite overwhelming. We have potential to become the third largest producer through this. New Zealand has the potential to become the third largest producer through this project coming to life. And the benefits of it's non-flammable. Unlike lithium, we've seen a number of lithium installations, grid storage and bulk storage, lithium installations combust. We've seen them in Australia, and it's happened in other parts of the world. Vanadium is completely stable. Again, we can move on. These are just quick some appendices, which I'm near the end of this project now. We most recently bought out our vanadium JORC resource. This was released to the market on the 1st of March and confirms 1.6 million tons of vanadium. Picture of the vessel. Anybody interested will be able to just tap on the link. I understand that this presentation will be available. If you tap on the link, it will take you to a YouTube of the vessel in operation. It's very simply a Cape-sized vessel with a magnetic separator on side. De Beers Marine, who've been mining for diamonds off the the west coast of Southern Africa, off the Namibian coast. They will be our contract miners. They use a screen. Here we'll use a magnetic separator. Thank you very much. Thanks very much for the opportunity to present Manuka. Any questions?
Yes, thank you very much. There are already a few questions in the chat. Are you expecting to be cash flow positive in the fourth quarter of 2023?
Yes, we actually were cash flow positive for September, and we expect to be cash flow positive from the fourth quarter, and every quarter thereafter is our expectation.
And where are you selling the gold and silver to?
So the gold and silver are sold to, primarily we sell to the ABC refinery, which is in fact, to date, all our gold and silver has gone to the ABC refinery, which is in Sydney, well located. in New South Wales. So we get paid ex mine gate. There are other refineries in Australia, as I'm sure some of your spectators are aware of, but we have a very strong relationship with ABC.
And which commodity will be the value driver for Manuka for the next 12 years, months, sorry.
Our gold will be the value driver for the next 12 months from a production perspective and also from an exploration perspective, because we've got the Mount Boppy gold project. It will be very easy to add to that project and come back into full-scale production. When we were producing gold from Mount Boppy, it was the grades were around 4 grams. The screening project just gives us great cash flow while we continue to look for additional units of gold.
And can you maybe elaborate again on the significance of vanadium production as a critical mineral for the utility of grid-scale battery storage?
Yeah, so vanadium is very stable, and there is a technology called the vanadium redox flow battery, which actually was developed in Australia, but that is becoming has become the benchmark for grid storage batteries. So unlike mobile batteries, for your vehicles, the grid storage will, they're far heavier. They'll remain in single locations, and they will, go on for a far longer period. So a lithium battery, I think it lasts for 8 to 10 years. Vanadium batteries will go for 20 years, and they are 100% recyclable. So they tick every box. There's no, they fully recyclable. They fully recycle. They don't have issues of combustion, of combustibility, or fire, as we've seen previously from the lithium batteries. And demand at the moment is very tight. When you've got 4 countries like China, Russia, Brazil, and South Africa producing, and the EU and USA wants to try and break from some of those countries. This puts us in a very strong position.
Okay, and can you also explain how the gold production cash flow will be used to fund the exploration program?
So we are expecting to produce between 15 and 18 million Australian dollars per year from an EBITDA perspective. I mean, this plant, this is where we are processing, although this is on the Warner Winter Silver Project tenements. This is in the Cobalt Basin. So we truck our gold ores from Mount Boppy across to this plant for processing. We expect to make good money out of the gold, and our expectations, as you saw, we have a budget of about $8 million for 2 years, $4 million a year. So well and truly covered by the profits from our gold production.
Excellent. The time is already up, so thank you very much for the great presentation and all the answers.
Thanks, Matthias. Thank you very much for your help. Thank you, everybody.